Hello, everybody, and welcome to the next installment of our webinar series with Butte County Library's REACH program. And so today is going to be basics of implementing employee benefits for your employees, for your small business. My name is Jacob Arbogast. I'm the director of the Center for Excellence in Finance in the Financial Wellness Clinic at Chico State. And with me today, I have Daisy Paulson, who is a paraplanner at the Financial Wellness Clinic as well. So quick disclaimer before we get into the details here. This is an educational webinar, and it is provided free to you for educational purposes. And we are not your specific financial planner, and we are not lawyers. And so while we will talk about implementing some employee benefit plans, and we're going to talk a little bit about investing and investment plans, this is not specific information for your circumstances. We definitely recommend that you reach out to a competent attorney or financial planner to help you implement some of these and help you in a way that is specific to your business. So if you were going to implement some retirement plans or some benefit plans for your employees, there's quite a few options available for all kinds of different benefits. Things like health insurance, probably the number one thing that most employees consider when they're looking for a job is, does it provide health insurance for me and my family? Or retirement accounts, long-term planning, definitely important. Retirement planning advising, so having an advisor available, not just having the account itself to have a retirement account, but having someone available to sit down with you or your employees and say, hey, here is a way to save for your goals in the future. That's something that we do at the Financial Wellness Clinic, is sitting down with people to help them plan for their goals. And having that benefit for your employees would be a great opportunity as well. Legal aid is another option. Sometimes that might be estate planning, or it might be other types of legal options or legal advice available to employees that they can meet with an attorney and help them in a one-on-one setting with whatever legal issues are arising in their lives. Workers' compensation, unemployment, and disability are three other benefits that you probably are familiar with if you have employees, because those are things in the state of California that you're going to have to provide anyway. You'll have to provide those to all of your employees. And so those are other benefits that, although aren't necessarily negotiable, they're things that you can provide to your employees and let them know that those are available for them. And so this presentation, in terms of time, we're not going to be able to cover everything in great detail. And so this one workshop we are going to dedicate to retirement plans and retirement planning for employees and implementing a retirement plan for your employees. But we will have follow-up workshops that cover some of those other topics as well. And so without any further ado, we'll get into it. So there are a number of retirement accounts available that you could create for employees. And it really depends on the kind of business that you are, or kind of organization that you are. Here's just a sample of a few different kinds of plans that you might want to think about, or you might consider, or you can see which ones may be relevant to you and which ones aren't relevant to you. So the first one that we're probably not going to spend a ton of time on is defined benefit plans. Usually you might think of that as a pension. You might have heard the term pension before. And the reason we're not going to spend a ton of time on it is because usually those are for like government employees or people that work for either governments or nonprofits or things like that. And generally small businesses or for-profit businesses don't offer pensions to their employees very often. So if you know of somebody who works for the state of California or is a teacher, they have pension plans called CalPERS and CalSTRS, and those exist for pensions. And the way a pension works is that they have a math formula that says a certain number of years that you've worked for the organization or the government times your salary when you retire will be how much you receive when you are retired. And usually a pension is set up to be that you would receive an income for the rest of your life after you retire. Say you retire at age 70 and then live to be 100 years old, that's 30 years worth of income that will be provided to you as a pension. And there are pros and cons to that. Having a pension available would allow you to not have to worry about, are you going to run out of money? the plan for a pension is that they will continue to pay you for as long as you're alive. And so you don't have to worry about running out. That's the state's responsibility, or CalPERS or CalSTRS. That's their responsibility to make sure that they will provide your pension for you for as long as you remain living after you retire. The downside is that you can't really save up extra in a pension. You can't contribute more to it and build more wealth. A pension is just it's a simple math formula of how many years you worked and your salary. And so you can't increase it very dramatically because you can't add more money to it. And so the kinds of accounts that you can add more money to, we call those defined contribution plans. So a pension is a defined benefit plan, meaning that they tell you what your benefit will be. And the other plans are defined contribution plans, where the employer says that you can contribute, or they might contribute on your behalf, to an account that will build wealth over time and eventually be worth, hopefully, lots and lots of money. And if you save lots of money and you have good investment returns in a retirement account, it can build up and have quite a large balance by the time you're ready to retire. And so pros and cons to a defined contribution plan would be, a pro is that you can build lots of wealth and you can contribute. If you're willing to sacrifice a little bit today for your future, you can put extra money into, say, a 401k or an IRA. You can put extra money into those accounts and hopefully build up and be worth millions in the future. And you go to retire and you say, well, I have plenty of money. I can afford any kind of lifestyle that I want to have. I can travel the world. I can go on cruises. I can go do whatever it is that I want to do in retirement and not have to worry because I've saved enough over time. The downside is, for a defined contribution plan, investment returns are possible to not be what you expect them to be. And so inside a defined contribution plan, there will be investments, and you may not have as good of a return as you thought you might. And so the risk is a little bit more on you to hopefully save enough so that even if maybe your investment returns aren't as good as you hoped they would be, you still have some set aside for the future. And so the few that are listed on here, a 401k, a 403b, a SEP IRA, a simple IRA, and then just individual IRAs for people that you can set up separately from a company. Those we'll get into in a little bit more detail in just a minute. So one resource that is very helpful and very useful is the IRS, surprisingly, or not surprisingly. The IRS has quite a bit of useful information on the website and some guides on how to think about which retirement plan is best for your organization and what might be best for your employees. And so on this link here is a PDF that you can look through from the IRS. It's produced by the IRS, and it's got a little bit of information on here about why create a retirement account, some things to know about creating an account for your employees, tax advantages for doing so, things to know there. And then this landscape page compares and contrasts different kinds of retirement plans that you might want to implement. And we'll talk about these in detail, but you can see IRA-based plans like a payroll IRA, a SEP, a simple, or defined contribution plans, which we just talked about, but it might be like a 401k, or then defined benefit plans might be a pension, something like that. And so this is available. You can download it from the library's website and read about it yourself here. So if we go back to our slides. So then what might be some considerations for deciding what retirement plan you might want to implement for your employees? So the size of your company would be one, both the size in terms of your revenue and the number of employees you have. There's quite a few different retirement plans that are dependent on contributing for all of your employees. And if you have lots of employees, then it might be burdensome to have to contribute for all of them. So that might be a consideration. What are your goals for your company? What your goals for employee retention, for supporting your employees? What are the financial needs for your organization? Those are all things to consider when deciding which financial or which retirement plan you might want to provide to your employees. Do you have a wide difference, a dispersion between the income levels of different employees in your organization? Maybe some people are lower income and some people are high level, high earners. That might make a difference as well. And one thing that's specific to California, that's not necessarily true in every other state, is that California actually mandates retirement plans for employees. If your organization has more than 5 employees, you have to provide a retirement account. Now, California provides this program called Calsavers. We can go look at that, but Calsavers is available if you don't want to implement maybe a 401k or a SEP because those might be too burdensome for your organization. Calsavers exists as a Roth IRA that is available to employees. And depending on the size of your business, you may need to either have already implemented that if you're a large organization, or you may have some time to implement it still. But this website, employer.calsavers.com, is a great resource to see what this law means for you. And if I scroll down here, there's an FAQ, frequently asked questions. And you can see, depending on the size of your company right here, if you have more than 100 employees, you already should be involved, either providing a retirement plan to your employees or implementing Calsavers. If you have more than 50 employees, that actually, as of June of 2021, is also, you would be mandated to have begun. But if you just have more than 5 employees, you have until June 30th of 2022, which at the time of this recording, that's the future. And so if you haven't yet provided a retirement plan for your employees, you can choose to use Calsavers. Or you can choose to implement a different kind of retirement plan. And the law outlines a few qualified plans that you could use instead of Calsavers. So a 401a, a 401k, a 403a, these are all different kinds of retirement plans that you could implement if you chose to. And so if you did any of these, then you wouldn't be held to the Calsavers program. But the Calsavers program is for employees in California, where they will have a Roth IRA, and we'll talk about what that means in a minute, but they create a Roth IRA for you and allow the employee to select or even opt out of certain investments. And those investments are long-term mutual fund type investments.
Some tax considerations to think about include that employers can deduct their contributions to employee retirement accounts. So this can be a great way to save on taxes while also supporting your employees. Tax credits are available to small businesses when they have costs related to the creation of a retirement plan. The Savers tax credit is available to low-income individuals who save in a retirement account. Roth and traditional accounts each have their own tax considerations as well. So in a traditional account, you invest your money and then pay taxes when you withdraw the earnings. So if you're in a high tax bracket now, a traditional account is usually the better option. In a Roth account, you pay taxes first and then invest the money. If you're in a low tax bracket now, a Roth account is usually a better option. So how do you know which one is best for you? There's a lot of room for error because it's hard to determine what your tax bracket is going to be later on. Brackets can change and so can your lifestyle. Some considerations to think about will be whether you plan on changing your lifestyle in retirement. So your home could be paid off, your kids are moved out, maybe you want to travel, golf every day, maybe you want to stay home. Those are all things to think about as well.
Yeah. So maybe let's talk about the different kinds of retirement accounts and more specifics about each of them. So if you wanted to implement a retirement plan for your employees, the first thing that most people think of when they think of a company-sponsored retirement plan would be a 401k. That's a pretty normal thing for most people to consider. And 401k is a defined contribution plan, and it's intended to be for for-profit companies. So if you're a regular, like an LLC or a corporation, then you're probably a for-profit company. Or even if you're what we call a sole proprietor, where you're not formed as a corporation, but either way, you're still probably a for-profit company. So a 401k might make sense for you, but there's some things to consider. So with a 401k, there are many rules about how you implement it and who's covered and how you hold the funds in a way where they are safe. Because when you contribute funds to an employee's retirement plan, you are essentially saying that you're putting that money in their account and it's going to be their money. And so you can't then go use that for something business related after you told them it was going to be in the 401k. And so this is one area where I would not be comfortable trying to wing it. You may decide for yourself what's useful for you, but there are organizations called third-party administrators, and that would be a company who you can hire to help implement your 401k in a way that meets all of the regulatory compliance that's needed to make sure that you don't run afoul of tax law and employment law and those kinds of things. And they are really good about keeping track of things like issuing statements to your employees to let them know how much is in the account, what the investment earnings are, those kinds of things, right? So definitely a good resource available to help implement a 401k. A 403b would be designed for a nonprofit entity. And so this probably isn't most businesses, but there are a lot of nonprofits that do have employees. And so it is something to consider. If you are a nonprofit organization, a 403b might be something that you want to implement for your employees. It works very similarly to a 401k. It's a retirement plan that is set up by the nonprofit organization. The IRS has a great website page for how 403bs work and who qualifies to implement a 403b for their employees. I copied some of the possible options for different kinds of employers here. So a 501c3 would be what we generally consider to be a nonprofit, right? Most people would think, oh yeah, you're 501c3, you're nonprofit, you can implement a 401 or 403b. But there are other types of organizations that also could do a 403b. So public schools, that would be an example. Universities, we're at Chico State, and Chico State has a 403b option for their employees. Also, certain religious organizations. And so there's a website here that you can go to see some of the things that you might want to consider in regards to whether or not a 403b is right for you. If you're a for-profit organization, then a 403b is almost certainly not going to work for you. Now, another choice that is a little bit easier to implement than a 401k or a 403b is called a SEP IRA, and it's a simplified employee pension plan. And the way it's designed is to be for a smaller business, maybe a self-employed type person, or maybe somebody who has a small business and a few employees. The difference between 401ks, 403bs, and a SEP IRA is that a SEP is employer-only contributions. And so an individual employee doesn't have the option to contribute to their SEP themselves, but the employer does contribute on behalf of the employee. And there's still some rules about implementing a SEP the right way. And so again, this is not an area that you want to mess up on, but it is a lot easier to implement. And the rules behind the SEP are not as stringent, because the way that they set it up is that you have to contribute the same percentage of income of the employee's compensation to all of the employees. So if you contribute, let's say 2% of your income to your account, then you need to contribute 2% of every employee's income to their account as well. And so if somebody makes a lot of money, that might be a pretty large contribution for them. And if somebody is maybe kind of lower on your pay scale for your company, then that might not be as big of a contribution for them, but it needs to be the same percentage for everybody's income. And so when you create a SEP IRA, you do need to create the rule for what counts as income for employees. And so if your employees are paid in a variety of different ways, maybe commissions and salaries and all kinds of different other forms of compensation, tips maybe, your SEP plan needs to outline who's eligible to be part of the SEP. So they need to maybe have worked for a certain number of years, or they need to reach some sort of milestone of some kind to be eligible. And then that rule applies across the board to all the employees. And then the other rule is that you need to implement is what constitutes income, or what constitutes compensation for your percentage contributions. The IRS, again, I'm going to keep referencing the IRS website, but it's very useful here in that they have a step-by-step process. And they say step 1, step 2, step 3, go through and do these. You have to file a form with the IRS to let them know that you're going to be implementing a SEP IRA for your employees. But then once you do that, you create the rules, you distribute it to your employees, let them know that the SEP exists now, and you start the process. So the last option here would be an IRA, which stands for Individual Retirement Arrangement. They're very easy to create for yourselves, and many people have IRAs available for themselves, separate from their company. An IRA is great because it doesn't need to be tied to an employer. And so this whole presentation is about, as an employer, creating retirement plans for your employees. But you're also, as an employer, you can create a retirement plan for yourself as a person, and your employees can go create retirement plans for themselves as well. If maybe you didn't have the opportunity to create one as your company. And so an IRA allows you to do that fairly easily. Many brokers, stockbrokers, will be happy to help you open an IRA. In fact, let's look at Fidelity's website. And I chose Fidelity because it's a convenient example. We do not have any relationship with Fidelity, but I wanted to show you their website and show you how easy it is to open an account. And so if I go to Fidelity's website, I can just click open an account and it will take me here. And I can see that there's a few that are, suggested because these are very common. And so if we look at saving for retirement, we can see there's traditional and Roth IRAs, and Daisy had talked about what traditional and Roth IRAs are earlier. A rollover IRA is if let's say you previously had worked for an employer and they created a 401k. And so you have this 401k, but you left the company, so you don't work there anymore. Then a rollover IRA would be when you take that old 401k from the company that you no longer work for, and then you move it into an IRA so that it's no longer affiliated with that company. That's called a rollover IRA. So if I click over here, all accounts, you can actually see that there are many different accounts here. And if I scroll down to saving for retirement, the 3 that we just talked about are there, but then there's also a SEP IRA, which you can open for if you wanted to create that for your company, you can do it right there. A self-employed 401k, a simple IRA. There's quite a few. There's a 401k for a small business. And there's quite a few different accounts here. And so we're showing you Fidelity's options, but this is true of most large brokers, that they will have options for different kinds of retirement planning for your employees. And you can open these kinds of accounts for everybody. So how would I go about providing an account to my employees? So we just looked at some ways you could open them through a broker. You can choose any broker you want. Fidelity was the example, but Charles Schwab is another example. Vanguard is one. TD Ameritrade is another. There's quite a few. There's many different brokers to choose from, and you could choose a broker based on what your needs are. You could interview them and see which ones meet your criteria. So how do you provide an account to your employees? So it depends on the kind of account that you want to create, but we showed you can open a SEP IRA directly online and start that process. You can go to the IRS website link that we have a couple slides earlier to see the step-by-step process of implementing a SEP IRA. I would guess they're probably the least stressful for a small business to open, because this process is somewhat straightforward, step by step, and then open it online and get started. If you're a large or even a medium-sized business, but large enough to where you're okay with regulatory compliance, or you're okay with hiring a third party to implement this for you, then a 401k might work better. If you're big enough where you have quite a few employees, like more than 50 employees, then a 401k might make sense. But more than 100 employees, then yeah, 401k is going to start looking a little better. The larger you get, the more likely a 401k will work. Some of the larger companies, thinking of Amazon and Google and Apple and some of the, all the big household names that we all know of, they would have 401ks for their employees, because that's a normal expected retirement benefit for employers to provide. And so when employees are looking for a company to go work for, they are looking for a retirement account to be available so that they can save for their future. And then a simple IRA is another example of a small business retirement plan that you might want to implement. It's specifically designed for companies with less than 100 employees. And you might think of it as like the baby step of offering a retirement plan. So it's a good first step. You can implement a simple IRA. And then later, as you grow, as you become a much larger organization, it might make sense to convert from doing a simple IRA to maybe a 401k or something else in the future. So where can I go to get more information, or where can you go to get more information? The IRS, I'm going to keep referring, the IRS website has quite a bit of information available. They have lots of links. They have lots of well-produced documentation. Another website, usa.gov, provides some information about other supplemental kinds of retirement planning, things like Social Security and how to plan for retirement. So that's a great website. You might want to direct your employees to the Social Security Administration as well to consider their long-term savings and how that might interact with Social Security planning. And then we will have remaining webinars. So this webinar series is part of the Butte County Library's REACH program. And so the rest of our webinar series will also include other benefits that you can provide to your employees. And so that would be another resource available to you as well. And so that's been just the basics of implementing retirement plans for your company. Appreciate you watching, and we'll see you in the next webinar. Thank you.